What is up, guys? This is Kip, and today I'm going to show you guys an extremely easy day trading trick so that you can let all of your winners ride without ever being too greedy. Let's get into it. One day you take a trade based off an idea you had, it goes your way for a bit, but then ends up coming back to your entry, or even worse, getting you stopped out. Now, it went your way far enough for you to take profit. However, you thought that was a solid trade and it deserved 2 or 3 times more of a move. So you end up getting stopped out at break even, or maybe even you take a loss. The next day, you take a trade based off another idea you have. This time, you're like, you know what? Yesterday, I got burned, so this time I'm just gonna take my quick profits and get right out of it. Then, of course, that trade ends up being the trade of the week. That it went for 100 points, 200 points move. Yesterday, I didn't take profit, I get punished. Today, I take profit early, I get punished. It ends up being the move of the week. What can we do about it? I'm gonna show you a quick and easy technique using an acceleration channel. All right, so we're looking at NASDAQ here, the current contract NQH4 from this Wednesday, February 7th. London impulsed the price up before New York even started. So for me, I was expecting at least one more leg up here for the day. So my bias was gonna be to look for longs. Then we have our scalpel here from the pivot high down to where the momentum drove it into that pivot high. And we can see there's a pretty perfect respect here from the 3-4, but then as it comes up to the kickback area, it does disrespect this. And for me, closing all these candles above it, it does lead me to a bias that it doesn't need to come down to these 706, 832, -1 levels, that it could already be done. And if I have another reason, based on the strength of this move and not having another high yet, and I have the bias from the scalp pull, then there's just a couple different reasons, at least on this time frame, for me to be able to expect another leg up and to be long biased and look for longs here. The other thing we notice is if you look at the CVD here, there's heavy bullish CVD divergence on this low right here. So that's going to give me a third local reason to be bullish for another leg up. I do have this sped up here to save us some time. As you can see, I'm marking out the CVD divergence for these two lows. I'm marking out that the kickback disrespect will give me a bullish bias as well, and this market structure break. I do like to mark out all of my thoughts on here just to keep everything straightened out live while I'm focused and doing it in the moment. So what I'm doing here is I'm just looking for some confluence to get in on a retracement. If this is going to be the start of another leg up, then this is going to be the retracement. I'm looking for something to be screaming out to me. So you can see here, I have a scalp pull up to here where I'm getting a perfect reaction from the 3-4. That's why I drew this box right here in this zone. But then I have this local scalp pull, which has the golden pocket just a little bit lower. So what I do here is I notice that, I pull it down to the lower pivot, the less greedy pivot, and I see that that kickback zone of that pull is right into our golden pocket of the lower time frame pull. So prices come into our zone, but we're still forming bearish market structure on the way down, and I don't want to catch this knife until I see some kind of sign of strength. The other thing that I'm noticing here is potentially some kind of flat pull. Like if this was a 1, 2, 3, 4, 5 as some kind of, I know it's wonky, but it could be some kind of leading diag. And this is just how those can look on the range chart on such a low time frame. But if this was the 5 of another leg up, then this could be an expanding flat. And in that case, I'm gonna pull a channel from the 0 of the A down to the 4 of the C, and then down to the A. So from 0 to the 4 of C, if this is ABC, and then over here. And what that channel is going to tell me is that once it breaks out of the top of the channel, then that means the flat is over. Now, we've broken local market structure here, and if I'm right in my flat, then we have broken out of that. So I just get more and more reasons to feel really good about this trade. I'm just waiting. I'm waiting on the last couple things. Like I was waiting on this little local market structure break. Now what I'd really like to see here, which you don't always get, but it's just something that I'm waiting for, because this wasn't that strong of a market structure break here locally. I'm still just a little bit iffy on it, and I want to see if we can get a nice little back test of the top of that channel, because that would just be icing on the cake. All right, so we're getting the back test. I'm still waiting. I'm getting exactly what I want, everything lining up. I'm waiting for 2 of these green momentum range candles to come in a row, and then I'm just going to market enter there with my stop under this low. Yep, so I'm writing down all of this as we're going. Now here is the important part. This is going to be the method that you can use once you got in a good trade to let that trade ride. So we have our trade here. We notice price impulsed our direction. It impulsed towards our desired direction from where we took our trade. Immediately, what you'll want to do then is draw an acceleration channel. And it's just going to be the top of the first little move since the low, the top of that move, which would be your 1, and then the top of that channel, you will just keep dragging to the tops of this current impulsive move up here, which you're looking at as possibly a 3 of a 5-wave move. Then the bottom of the channel is going to go on the low that contains all of this price action. Now, the way this works is if price breaks through to the right of this channel, then it tells you that your 4 is starting and that you're going to get a 5, which is going to come and take the high one more time. You don't even have to worry about taking profit here. Just wait for it to break and put your profit at the high. That way we can let an impulsive winning trade ride, and we don't have to get scared of it too early because the channel is telling us all that we need to know. The channel is telling us that the impulse is still going on and there's no reason we need to take our profit already. The other thing that we can do here is we can start moving our stop loss into profit. If this is a 5-wave move, then the 4 of it can't come and tap the high of this 1. So that could be a first place that we put it just right under the 1, because then that idea is invalidated. But as we move up higher, we can just start pulling it 1 or 2 low time frame pivots back. So you see what I do right here? Now, this isn't some BS where you're making it fit. This is how the acceleration channel works. As long as price has not broken out the bottom of the channel here to the right, then what you do, because an impulse can continue to gain momentum, it can get stronger than it was even before. So we had it here, price came up and pierced through the top. So we actually adjust the second pivot to now be this top, and then we readjust the bottom to continue to contain it. We continue to do this until price eventually breaks through the side. But as long as price is being contained, we follow it up along the tops of that, and we don't worry about taking our profit until it actually breaks and then makes one more high. At this point, we're well into profit, but there's still zero reason to take our profit here because we see that we are in an impulse, and the impulse is arguably still gaining momentum. So keep trailing the stop. What do we do here? We're going to take that same pivot that was here because now we're gaining even more momentum. We're going to take this pivot and move it up to here. So now our channel is becoming steeper, but we're letting our winner ride without any fear of being greedy, because we know that once it does eventually break to the side of this, again, based on the acceleration channel theory, it should make another high right afterward. So letting it ride, continuing to pull it up here. So there's only one candle tapping the top, and then pull it down. So there's only one candle tapping the bottom. So at this point, it's starting to look just a little bit heavy. Price did come and make this tiny little break here, but it's not too big. So at minimum, if this is the break, at minimum, it should make another high. But because this is so small and doesn't really look like a corrective leg yet, I'm still gonna hold on to it and not right away put my take profit right above here. All right, so at this point, we are finally breaking the side of the channel, and that tells me again that this is going to be a 4 that we're in right now. If this was a 1, 2, all of this was an extended 3, and now we're going to be putting in a 4. What does that mean? It means we have to put in a 5 at some point. That 5 is going to want to take the high of this candle. So at this point, I can just pull my take profit down to the high of this. Even if it goes further, that's fine. We let a scalp trade that could have just been a $15 move run up to at least $80, maybe even $90 at this point. Beyond that, we don't need to be greedy about that. At this point, I am putting my stop loss right under this little order block here, because that is the order block that supported price to make another high. And that would be the important order block for me, where this is a big enough move. You know, even if it stops me out, it's a huge win. And ideally, I'm gonna get my 5 and get another high here. Worst case scenario, it'll stop me out for still probably $60 move or something like that. Almost there. Just one mini contract looking really nice here. Almost $1,800 down there. And we feel confident in it making this other high because of the channel. And we get it. So this was a solid example from this Wednesday trade, how you can use an acceleration channel to let your trade ride, and you don't have to feel greedy about it because the channel has rules. Follow the rules and you get rewarded, right? We had this impulsive channel the whole time. It didn't break it, finally broke it. And then all we do is we just take profit at that high, because yeah, it could go further, and it does go a little bit further here, but it could just take the high one more time and then drop. And you know what? After a $90 move, I'm pretty happy. I don't really need to try and get anything more from that. And again, just kind of recapping the all the TA that helped me get that low there. We had the lowest time frame scalp pull with the 832 -1 area lining up with this scalp pull that was respected on the way up. We had the kickback of there, and then we had our flat channel that we broke, and then we back tested it, and then we had the 2 green momentum candles in a row, and that's when we market buy, stop loss under their low. If you want to be a little more conservative, you can use that low. That's totally fine. For me, if this was a flat, which I felt good about, there's other ways to count it, but I counted it as a flat. If this was a flat, then the move down would be over. And for me, seeing the momentum start up with the 2 green candles here off that back test tells me that flat is over. If the flat is over, then the next impulsive move should start, and this low should hold. One interesting thing is if we actually look at this move again on the 1-minute chart on TradingView, you definitely could have had the argument that if this was your one, like we had, that move where I took profit right here at another high after this, you could have seen that that was all still contained in the same channel. So if you're paying attention to all of your time frames, then maybe you don't take profit there. Where I did, you notice this on the 1-minute, and you're not even thinking about taking profit until it breaks the channel way up here. And then you take profit right above this high there, and you basically catch the top of the move for the rest of the day. Let's look at another example of this, and this is from Thursday on NASDAQ. If you caught this move down here, was a part of another 5-wave move up, you would have just had your acceleration channel up here, pulled it down to there, not even thought about taking profits until it broke the channel here. Once it breaks the channel, put your profit right at the other high. In this case, it just takes it by a little wick, and that pretty much ends up being the top for the rest of the day. It came up one more time, but that doesn't really matter because we're talking about the take profit on your long and not the perfect short. And then let's look at one last example from today. If you had some analysis where you caught the low here, you could have had your impulse channel starting here, up to the top here, down to here, and you wouldn't have even thought about taking profit on any of this move up here until we broke the channel, and then maybe you take your profit right up here. But at least you catch a really solid move and you don't get scared at any of this volatility here in the middle because it's still contained in the channel. And of course, not every single trade it's going to let you get a $100 move or $200 move. But even if it lets you squeeze 5, 10, 20 more dollars out of that move every single day on your trades, that adds up huge. If there's anything else you see me do that you want to learn a little bit more about, let me know in the comments. Hope you guys enjoyed it. See you later.